Welcome back, everybody, to Be the Trader. Today, I have a very, very special guest, someone that you all should know about, but if you don't, you're going to learn a little bit more about him today. And this guest is someone that I've known in a different kind of level. I met him personally, great guy. And a lot of you probably think the same way just from hearing what he has to say about stocks and trading on YouTube. But today I have Roland Wolf. Roland, welcome to the show, my man. It's been a long time, brother.
What's up, man? It's good to see you.
It's good to see you too, man. It's great to see you. And good thing, big things coming your way. It seems like you're partnering, you're trying to grow your own business, and you've just reached, I think it was like $1 million in trading profits, which is awesome. Congrats there, man.
Yeah, it's crazy. Same to you, man. It's good to see you. I've been following your channel now for a little while, and ton of good info on there. I mean, some really good traders, and the content's really great. So congratulations to you as well.
Thanks, man.
None of you will know this, but Alex is like the first person who ever reached out to me to learn, like, for me to teach them, pretty much, ever. Not the first person ever, but the most persistent person who, like, I ended up kind of chatting with online, and then ended up mentoring for a while. So it's kind of crazy, man. Kind of how full circle things come.
It is. It's so crazy. And before we dive into your background, just since you brought that up, what was very interesting to me, I shared this on the show. I talk about how I sat with you for about like a week, and we just hanged out, and I saw someone that, at the end of the day, when I left, like, I wasn't profitable at all and I wasn't consistent, but I saw someone who could pull the trigger and just keep pulling. And I was like, man, okay, so that's what it takes to not have that, like, to have that disconnect. But then I also saw someone that, and in all fairnessness, you're no smarter than anyone else out there, just like me. And I was like, he's just like me. Like, why can't I do this? And I was like, it's because, he has that discipline. And so I went back home, and then it took me a little bit longer, from there, and just kind of like found my own way over time and realized I have to short, not long. So that's just me.
Yeah, man. What's so crazy is, like, if I could go back to that period of time, that was what, early 2017? Was that 2017?
I think wasn't that 18? It might have been
18 or something like that.
Yeah, I think it was 18.
Yeah, if I could go back to that time, I wouldn't have learned from me personally. Don't get me wrong, my trading was really good at the time. But teaching someone, or like trying to mentor someone and help them, is a totally different ballgame. And at the time, I was pretty fresh. I'd only been trading for like a year and a half or something like that, 2 years maybe. And a lot of things have changed since we've last spoken.
Yeah. Oh yeah, a lot of things have changed.
I mean, night and day. It was hard for me because it was one thing for me to, to trade, but to quantify that to someone else and then translate is really difficult. Especially when at that point in time, I was really still just like a noob. I mean, I was a successful noob, but we had an excellent market in 2017, if you remember. Mm-hmm. And yeah, it's one of those things that's just kind of crazy, but it was good. All of those experiences teaching has made me better at trying to help other people as well. So it's been good.
Well, what sticks out the most in terms of that time? Because since you brought it up and you were thinking, like, you personally can see a difference on how you taught then and now. What can you explain what you mean?
I was more, I don't want to say running and gunning back then, but like you said, like when we were working together, I had no problem pulling the trigger. I think a lot of that had to do with my naivety in terms of like small cap, and not understanding what goes on like behind closed doors, pretty much what's actually happening fundamentally with these companies. And so I don't know how to explain. I don't, like, with my experience, if I went back to 2017, I don't know if I could have traded the same way. You know what I mean? So it was almost kind of a bit of luck in terms of like my naivety meeting a sweet market. And I think that's happened this year again with a lot of traders where maybe they come in and do really well because the markets have been so hot. I mean, not the last couple of months, but just in general, you know what I mean?
Yeah, absolutely. No, and like today, I mean, the markets have been so hot that everyone can just buy anything. The last 2 months, and everything was just running. And then now, we had a slow market. all the shorts get comfortable, and then we have a huge squeezer today, SPI or SP whatever I think it's what it was.
SPI.
Hey guys, I just want to take a moment to share with you some awesome news. I just started a newsletter, and you're probably like, what's so awesome about that? Well, it's not your typical newsletter, because I'm going to give back to you, the people who subscribe to the newsletter. Number one, you will be getting updates on my YouTube exclusive videos, the podcast episodes, and articles and blogs all about trading. But how is it different? I'm going to give back to you guys. I'm going to select randomly different subscribers who are in the newsletter and give them either the opportunity to have a one-on-one call with me. Maybe I'll give them a free trading book, one of my favorite trading books, just to name one, Trading in the Zone. And also, and not only, because there's many, many more ideas that we're going to be doing and implementing. But another idea is maybe win the Billions box set. This popular show on Showtime, Billions. If you don't know about it, definitely look it up, because it should be everyone's favorite show if you're a trader. At least it's one of my favorites. So I want to give back to you guys, because you guys mean a lot to me. And I just don't want to only provide content, but I want to say thank you, right? And I provide content by saying thank you, but I also want to say thank you by giving back. So thank you guys, and you guys take care. Yeah, and so for those who don't know who Roland Wolf is, maybe there's some people out there. What really got you? I know the long story short really is, for those who don't know, from my understanding, is you were in soccer professionally and you played overseas, got injured. And then after that happened, you kind of were like, kind of in the dumps, right? Like you were like, man, this is what I thought I wanted to do, and then I can't. And then you end up working in the family business a little bit and found trading, worked your way into trading. Give us an idea of, from that moment when you found trading, like when you started like actually trading, what was like the most challenging thing for you at that time? Like when you first discovered it and you kind of were trying to get your consistency yourself?
Everything, you know what I mean? And when I look back at it, when you start trading without any prior education or knowledge of what you're doing, it's like just a jungle. You have no clue what you're doing. That's how it felt to me. Every morning felt like chaos, a bunch of chaos with no rhyme or reason. And that's really frustrating. And to get beyond that, to where you can like narrow down plays, not only plays, but plays that are going to be volatile, and then move in the direction that hopefully your bias is in. To get to that is really difficult without understanding that it's necessary in the first place. In other words, developing process. You know what I mean? Developing process. I didn't even know that was what I was supposed to do. Just a lot of like YouTubing and Google searching at first, trying to figure out what strategies are going to make me the most money. You know what I mean? That's kind of what you think, and end up on breakouts. But really at the end of the day, you just end up chasing everything around. You know what I mean? And that's kind of inevitable. Even with education or someone, if you have a mentor or something like that, just your natural impulses, you're going to do that. So getting beyond that, it's like that initial learning curve of like learning the terminology, understanding executions, and just the very, very basics. That's a pretty big learning curve. It's almost like learning another language. That's what I found, at least. I don't know about you, but that was the case for me. It was a very, very time intensive thing just to learn the basics of trading, much less all the, the myriad of super complicated things that go into the rest of trading beyond the basics.
Yeah, no, that makes sense. And it's something that sticks out for me is, I think you said a long time ago in some interview or some YouTube video, you were like, you used to, or what clicked for you is when you started buying dips rather than chasing, right? Because you used to just chase when you first started, like, hey, it's a breakout, I'm just going to go after it. And can you explain like what made you start doing that, and how were you doing it? Because when I first met you, I watched you do it, and I was like, at that time, remember, I was young in my trading career. I didn't know shit about trading. And so I'm like watching you buy these panics, and I'm like, what? I'm like, what's going on? So like, what got you comfortable in that kind of mindset, and what kind of clicked for you to say, okay, I'm tired of buying them up here. I need to start waiting for a drops.
Yeah. I remember the exact catalyst for that change. Prior to, the change was actually when I saw Trading Tickers by Tim Bertani for the first time. That was like mind blowing to me because a lot of my entries and the way I looked at stocks was just completely wrong. And so my risk reward, wasn't even really sure what risk reward was, and I'm still fine tuning, my takes on risk reward and stuff like that. But back then I would literally just cut if trades went against me because I didn't quite have a grasp on risk reward, not just like the levels, but all the other stuff that goes into it. So learning how someone as successful as Tim Bertani sizes into positions and the way he goes about defining his risk and then levels that he uses for risk was a total game changer for me. It was a total game changer for me because I realized like it's not just him, it's all the other successful short sellers are also going to be doing kind of the same sort of thing. Not all of them, but a lot of them, they're going to have the same sort of ideas. So a lot of my entries prior to that were just really chasing entries into resistance or, levels that are just super shortable. And of course, at times it works, like you get a breakout or something like that. But odds wise, the way I was playing, I was buying like in anticipation of breakouts, just trying to be a little bit early, which led me to buying a lot of tops. You know what I mean?
Yeah.
That mixed with, it was pretty much trading tickers, that I realized, holy crap, like literally, and I remember the moment, like I've been buying Tim Bertani's shorts.
Right, right.
I didn't understand the concept. I mean, I understood short selling in theory, but until you watch someone who's really, really good at it, one of the best, to do it. When you watch how they operate, you get to see them do these live trades. It totally changed my perspective completely. So from that point on, I remember telling my wife that I had this like amazing revelation after watching that my goal was to never buy his shorts again. You know what I mean? That was it. And I said, it was just something I told myself. But that was what led me on a journey away from everything else that you kind of see in terms of long strategies.
I feel like that was a big moment for you, man. I really do. I think that kind of catalyst, that was a catalyst in your trading career to actually get you on the consistency path. It feels like.
Yeah, I say it all the time. I say that all the time.
Just switching from buying the breaks instead of, chasing and just waiting for dips. Because then I think you were really good. And this is something that I don't quite understand. And I want to ask you this, and I'm going to ask you this next, but I also want to ask you something else about risk management. You at first said that when you used to buy and then you would just cut as soon as it was against you because you weren't quite sure. You just wanted to protect yourself. And I remember you started with a small account, so that's probably why. You're just saying, I need to cut my losses quickly. Now, when you did that, I mean, you still found consistency that way. Like you found consistency where you would like cut your losses like as soon as it went against you. But what do you mean by as soon as it went against you? And not only that, but what also do you mean by did you have an idea in terms of a risk level, or were you just like, if it hits, if I'm negative, I'm out?
Yeah, it depended on the scenario, and then obviously size. Like there were times, when you're starting out, even now, there are times where I end up with too much size somehow, and then I start, and it just affects me psychologically. So that would happen early on as well, but. So it wasn't completely like just if I was red, I was out. I was playing stuff like higher lows, and then my risk level would be like the previous low. But they would just be arbitrary lows like within a chart. So while I ended up cutting a lot of small losses, that's just how it's still kind of like that for me. I've never been one to have really wide risk levels for the most part. I like being kind of precise with where my entries are, what my risk is on those entries. And it's just kind of like, man, like the portions of the chart that I play in now have just been whittled down to such a small portion, just from doing it for so long, you know what I mean?
Yeah. And so are you saying that when you were, and I get what you're saying in terms of your risk and prior levels, maybe they weren't as significant, right? Maybe they were just like on a minute time frame and they just happened like 3 seconds, 3 minutes ago, and it's a lower high or something like that. But what I'm curious about was, were you still sizing in at that time in your career? Let's, for just argument's sake in this discussion, not that you were using this number, but let's just say you were risking $100, right? And if you were risking $100, then are you still sizing in, risking that full $100 for that lower level, or because you're saying you're cutting it quick to keep your losses small, and you don't like to risk wider risk? So I'm trying to make sure I understand. Are you trying to get tighter risk that we can have a bigger size for the same dollar risk?
It wasn't, dude. I wasn't even. It wasn't even like that in terms of, sizing and stuff like that. It wasn't. Like I said, I didn't have so much of a process.
Yeah.
What I was really good at was timing. Like I was good at watching price action, knowing when to enter a trade, when not to enter a trade. So it wasn't like, it may come off as really floozy, like I would just cut if it went against me. But it really was like that for quite a while. I had a knack for timing. Okay. The timing, so that's what, in the beginning, like I was able to find these volatile plays, especially through 2017, time them well. But yeah, like I said, I didn't really know too much about risk. Like my take on risk from then till now you can even compare the two. So, and a lot of that, like I said, did come from trading tickers. So in other words, like I was using somewhat arbitrary levels. And because of that, I would get stopped out a lot. I still get stopped out a lot at times because I'm not one to use the wide levels of risk, nor really let my risk levels get breached and then not cut. So yeah, it's really, really tricky. It took me a really long time. And that's why I say if I could go back to 2017 me,
yeah,
I wouldn't teach you because I wasn't qualified to teach you. That's what I feel. I wasn't able to quantify risk because I was talented and able to, do really well in a really hot market, doesn't mean that I can translate that to somebody else.
And it's funny you say that because I do remember you were able to, as soon as you enter, the stock went more times than not. And now that I'm further in my career, when it comes to longing, which I don't long, but I see those exact moments like over time, because you studied for freaking ever. And now I'm pretty much the same, where you start to see how stocks react. You start to feel the momentum. You see the time in sales. You see the levels too. Everything starts to add up, and you're like, boom. And you can at least take a quick move. It's almost like you had a good scalper eye, but you would hold them. And it was interesting. So it was very interesting on there. What's the difference now? Because you bring up, and that's my second part of the question, risk management. How do you view it right now?
Oh, there's like so many more things that go into it. Like I said, it used to be pretty arbitrary levels, not all the time, like breakouts, certain things like breakouts, like I would use good levels. But even breakouts, the way I would play breakouts, at least the way I thought you're supposed to play breakout, is you buy it and then you cut if it goes back under the breakout level. And because of that, as you know, and anyone who tries to play breakouts knows, that you get chopped out so hard all the time. And then if you're under PDT, it's just super frustrating. It's just super frustrating. So little things like that, how I played breakouts changed after watching trading tickers. To the point where, like, instead of buying in anticipation of these breakouts that may or may not come, I would let them break out, either buy the breakout, but more likely than not buy the pullback to that level once it confirms, stuff like that. Just a big, big change from previous, In terms of risk now, what goes into risk for me, obviously, like, there's the sizing, but really what the most important part of the risk to me comes from the process before that. Like before I even get to the risk part. So I got to do my due diligence, in other words. And obviously, as you know, small cap, if you're looking for super volatile stocks, they're going to move super quickly. So when I'm doing like my pre-market due diligence, filings go into my risk. Not the risk itself in terms of the level, but whether or not I even want to take part in the stock in the first place. So, prior to defining your risk, one of the hardest things is narrowing plays down, especially to the long side as to what can run and what can't run. That's first. Like, I think there's so much stuff that goes on before the trade when you're trying to buy these stocks or short, in terms of planning and stuff that I didn't used to live by so much. And because of that, it used to be a little more stressful. You know what I mean?
Yeah. And so, for the audience out there, what is one thing that gives you a good indication? And for those who don't know, he has a great DVD that goes over everything, like his whole process. But just for the audience right now, what is one thing that you kind of that you can now see before you actually enter the trade, because you're planning your trade, which is so important, planning your trade? What is something that you like, okay, this means that there's a better chance that I should play this because the odds are higher it could run?
Okay, so first of all, the very first thing is always going to be like, what is small cap doing? Have we even had runners lately? And that is my main thought going into every single morning. And then, I watch the action every day. If it's slow, I know it was slow yesterday, so I come into the day after with realistic expectations. I'm going to minimize risk in slower markets. I'm not going to be as aggressive. If my patterns aren't there, I'm not going to be aggressively trying to play patterns that aren't working. All of that type of stuff. So the macro to me is always what keeps me safe and what keeps me looking in the right places. A lot of people just get sucked into the charts, and they get sucked into the 1 minute chart and their little scan, and they get in their scan and they're trading away. And that's a really tough game to play. If that's all you got, results will be super mixed and most likely terrible.
That's a good point. I love that you brought up that the most important thing when it comes for you now about risk is everything you do before the trade. And that's what a lot of people don't understand, right? A lot of people just think, I just have good risk reward, right? I just have a good area to risk off of and a good area to, take profits, and just take that trade over and over. And then I'll be consistently profitable, which I tried that and it doesn't work. It doesn't work that way. Yeah. So it's awesome that you said the way you answered the question is saying it's everything I do before. And you spend the pre-market hours to really figure out what you're going to do. And the fact that you look at the macro, because that's something that a lot of people, in terms of macro and small cap land, right? Not just the macro in the SPY and the NASDAQ or the Dow, but the small cap land, right? If things haven't been running quite often, then you're going to be a little bit more cautious. You might size down, I'm guessing, right? Like you might kind of be a little hesitant to just gunsling it.
So the macro controls everything for me in terms of my aggression, in terms of my sizing, in terms of like my frequency of trading. It's all macro, and that's a 24/7 thing for me. I'm always keeping track of small cap. And just like you said, that it's not just like the Dow and the SPY and stuff like that. I find that micro cap stocks oftentimes will move independently of their overall markets. This year is a great example. We had one of the biggest, if not the biggest, panics in the history of our market. And small cap stocks were on fire like I've never seen. Granted, we had like coronavirus tickers, so we had a bunch of different sectors that were, lighting up. Like I haven't seen since 2017. And maybe even surpassing the action that we saw, definitely surpassing the action, because we've seen just a boom in day trading. We just saw this massive boom of like people who got fired due to the coronavirus, and then wanted to test their skills in day trading. So it's just been this huge recipe for this total crazy year now.
What talking about sectors and hot sectors, that's something I remember you by. And we talked about a little bit before the show started that today we had some energy plays moving because of SPI. Today is September the 23rd. Mm-hmm. And so I was looking at energy plays and I was like, yeah, I remember Roland always always going after these sympathy plays. Yeah. That's something that you're good at. So can you explain, just for me even really, or for the audience, like what is something you look at when you see SPI, right? So energy, it's moving like a rocket, it went up to like 3,500% today. And so what are you immediately thinking? And when do you start thinking, I need to look for sympathy plays. You know what I'm saying? Like, when does that trigger in you? Is it 100% to, like, give me an idea, or is it I'm sure it's the macro too. Like, everything's been slow and now boom.
Yeah, good question. Sympathy. So sectors and sympathy plays are some of, in my opinion, the best opportunities for good, pretty high probability longs to make exponential gains. And it's not like it comes around all the time. And this year we've seen it. This year we've seen a lot of it just because of the macro thing, coronavirus, the macro, we ended up, a lot of stocks are looking for the vaccine, and a lot of stocks because of that have ran. Look at NVAX. Like, look at some of those stocks from the prior to Corona. Those were the biggest POSs in small cap. You know what I mean? You wouldn't ever long those. Yeah, to get back to your question, so like we're seeing it again. We're seeing sector plays, we're seeing sympathy plays. And today's a perfect example of a lot of things. Like, for the last, obviously this year through, I'd say July was as hot as our markets get in small cap. And then we saw summer lull finally, August, September. This is September now. And I've been literally doing nothing for the last 2 months. I mean, I've been trading, but I pulled the aggression way back. I've been in capital preservation mode after having a really nice first half of the year. And I've just been saying to my students, like, I'm just waiting. I'm just going to wait. I'll keep taking singles. And then when we have a big runner, then I'll consider kind of coming out of this shell. And it's the only way I know how to go about protecting gains. A lot of people think you just trade like at one speed. You got to trade every day and you're trading all year round. And that's what professional traders are doing and stuff like that. And it's so far from the truth. And today's a perfect example. SPI, obviously, when a stock runs 4,000%, there's bound to be a few sympathies. You know what I mean? What a lot of people do is overcomplicate it. That's what I find. And it's hard to believe. It was hard for me to believe at first. I remember back in like 16, end of 16, seeing the Dries run, TOPS. Remember those?
Yep.
Obviously. But that was my first experience with watching sympathy plays in a sector. And I caught on immediately. I saw what happened. I'm like, oh, look. And it's not rocket science. Dries was going to 100. There were 4 or 5 other shippers at the time that were also running in sympathy. And that was, the first time I was exposed to that. And then from then on, anytime there was a big runner, I just knew, I knew that there were going to be sympathy plays. I don't know how to explain it. And a lot of what I did in 2017 was based on that. Most of the money I made was based on like the Bitcoin sector run. Shipping stocks, again, they did it like 2 or 3 times after that. Weed stocks, it's something that I've always loved. And I've loved kind of the wealth of opportunities that a good sector run can bring to longs and shorts.
Absolutely. And what's interesting is, what I want to know is, I'm curious on when it comes to sympathy plays, is it too late? Because someone might be listening to this and they're like, well, is sympathy mean I got to predict these next ones that are coming up? Or does it mean I can still wait for these to kind of show a sign? Can you explain that?
Yeah. So it's not an exact science, obviously. Sympathy plays can be super sketchy. And that's one of the issues with them. And it's one of the issues. I don't like to chase sympathy plays. There's a big difference. My goal when there's a big runner is to locate the possible sympathy play quickly and then watch it for a little while. I don't just find a sympathy play and then just put, I'm not just like buying these things. I watch them. So in today's case, we had, sorry, my brain's pretty fried. What a
we had, so SPI was jumping and then SUNW was moving.
Right. So
we had CBAT, Craig.
So once SPI ran out of its like morning range and it was clear it's not just going to be a failed spike and fade this morning, massive volume and big squeeze, like to where it was 9 initially. That is what immediately put me on the scan. I mean, I'm on my scan all morning, kind of like, like any other trader is. But that was the point where I looked at my scan to specifically find sympathy plays, In this case, it's easy. SPI, they're apparently going to be the new Tesla or something like that. Just so crazy to me. But, SPI is another one of those stocks that you wouldn't touch it with a 10-foot pole a year ago without this EV sector. So things change. But we had SPI, so I saw SunW on my scan, a couple of other energy stocks. And at times that's as simple as it is. And then for me, it's about going back in the chart history, seeing if in the past they spiked together in the past. Mm-hmm. And sure enough, if you go on SunW's chart and you go compare it with our big runner today, there have been times in the past where they ran in sympathy. So that to me was more than enough. And I ended up with a little bit of what I would think is a late entry for me, which was at 87, 88 cents. And that is before it really ran. It's only up about 20% at that time, or 30% today. So yeah, my goal is to be there before all the chat rooms realize it's a sympathy play and start pumping. You know what I mean? That's just what happens. A lot of small cap is a lot of pumping going on. Just because we're kind of like sheep, everyone kind of buys the same stuff and chat rooms trigger chat rooms. And if there are enough shorts in there, we can squeeze them. You know what I mean?
Yep. Are those plays that you're willing to, give us an idea of your mindset. Are those plays are just in and out? Is that the goal? Is it ever those plays that you want to hold, or is it depend?
It depends. It depends on whatever the sympathy is. So like one of my issues today was that the leader, and there's always going to be a leader when you're talking about secularism, but the leader was, dude, I'm so brain fried. I'm so sorry, man.
You're fine. SPI.
Huh?
SPI was the leader today.
SPI. Anyways, SPI. SPI was the leader, and it was up 4,000%. At some point, it had to pull super hard. It did. Who knows what it's going to do from here? But the idea is also like if people get worried that the leader is going to fail, oftentimes the sympathies will fail as well. And even if it's not like complete failure, it can be enough to like take a really good trade and turn it into an L, like when you're cutting or something like that because it pulls hard. So I'm still trying to play sympathies, but like I'm trying to get great risk reward. I can take decent size and be early enough to where I'm not chasing a spike and getting caught in something like many people did today. SunW went to 450. I sold it at $1.30. I sized out a half of my position, and I sized out of the second half at $1.60 on the first unhalt. And it was a good day. I made like $10,000 on that today.
Nice, man. It's what go ahead.
You know what I mean? So that's trading. It's hard.
What's interesting is hopefully people caught this, but what Roland just said is he said he doesn't just look at other plays that are in the same sector and just say, okay, I'm just going to buy it. He looks at those plays and then he looks at them for a little while to kind of get a feel, right? You also look at the daily chart to see what ran in sympathy, which is just really smart, right? It's almost like I'm a short seller. So what do? I actually look at all the ones that fail every time they spike, right? I'm looking for something very simple as that, right? And now it's funny you say that. And it's just very interesting that not only do you do that, but then you watch it. You don't just like, okay, cool, let me just jump in. And like you watch it. And then I'm sure what usually happens, at least with me, I'm sure with a lot of traders out there, when you watch the stock, I mean, for even just 5 full minutes, you'll start to feel it. And then you'll start to understand like, oh, wait, something's happening. Maybe I should be getting in now, right? And so that makes a lot of sense. And I appreciate you sharing that because there's a lot of insight on that because I don't long at all. And it was just very interesting to hear what you had to say about the sympathy plays, especially since, I mean, those come every year. I mean, every year they come. It's not like all the time, but they do come. And when they come, they freaking move. So I appreciate you sharing that with the audience. Now, let me ask you this, Roland. Before we start to wrap this up, actually, since we're about to wrap this up, are you ready for the closing bell round?
Yeah, let's do it.
Awesome. So here we go. What is your favorite book or movie?
Braveheart.
Braveheart?
Braveheart.
All right. What's your best trading memory?
What's that?
Your best trading memory.
Oh, my best trading memory. Best trading memory would have to be the first $1,000 I made. I don't even remember the ticker, so I could maybe we couldn't call it my first trading memory, but or my best trading memory. But I remember it so vividly because it was like it took like it was like a 5 or 10 minute trade, and I had made $1,000, which was the same amount that I made in an entire week, 40 to 45 hours of work. It blew my mind.
Awesome. Awesome.
That would have to be one of the fondest, at least.
If you could name one aha moment in your career.
Trading tickers. Planes.
Yeah. We talked about that earlier. And then
the moment I realized where, I have terrible, terrible, terrible entries and I need to do something completely different.
If you lost your account today, right, what would you do next?
Oh, such a hard question because of my situation. I have, as you know, I got 3 kids, 3 young ones and a wife. So it's out of the question for me, which is why I have a lot of safeguards in place to never do that. I don't keep all my capital in one place. If I'm short selling, I'm very, very careful with what I do. But if it were to happen, I suppose I would have to get a job. I'd probably start going back to school, and I would fund another account and start building over again, I guess. I wouldn't stop trading if that happens, but I have a lot of safeguards in place to make sure that doesn't happen.
Perfect. And what is if you have one, what's like your favorite indicator?
VWAP. It's the only indicator I use in terms of like on my chart. It's the only indicator.
And finally, Roland, man, what is like people are probably going to have questions and they're going to learn more about you. So what's the best way for them to get more information on you or at least reach out to you?
You know what? Right now, just social media. You can reach out to me. It's Roland Wolf 86, Instagram and Twitter. I'm going to get my YouTube going again. I haven't done one in a really long time, but I've been on recently and I've seen some of the stuff that's on there. It's really, really bad. A lot of it. Some of like your stuff's good. So there's a lot of good stuff too, but it's mostly bad stuff. So I'm going to get back on there too, so you guys can catch me on YouTube. Awesome. But that's it for now.
Awesome, Roland. Well, look, man, it's a pleasure to bring you back or get you on the show and talk with you again. It's always fun talking with you. So I appreciate you being here, my man.
Hey, it was so good seeing you, brother. And I'll definitely catch you soon.